What is up, guys? It's your boy, No Risk, No Premium. I'm here to give you another episode of the Sunday Sermon. Happy Sunday, everybody. Hope you had an amazing weekend. I know I did. I did a little bit of traveling, got to have a little bit of fun. But now it's right back down onto the nuts and bolts. Time to get to work, time to get ahead. That's why we do this. Okay, so going to give you the meat and potatoes because I am on the road today. I do have a different headset setup and microphone, so I do apologize if the quality is not as crisp or clear. So hopefully I'll just get right to it. Hopefully just get you everything you need. But look, where do we end the week? 390. What did we scream all week? Go back to last week's Sunday sermon. I said I think we'd go 390. Well, we finally got there. It took us all day Friday on the melt up. So what are we going to expect to happen this week? Okay. Well, we finally got out of our range that we were in, right? For about a month. Now we're out. Do we stay out is the question, because we have some catalysts coming out this week that could take us either direction. Okay, so let's look what we got on that economic calendar here. Chicago PMI Monday, the manufacturing PMI Tuesday. I will be interested in the motor vehicle sales on Tuesday, only because motor vehicle sales, that market was extremely hot, similar to retail. It'll give me a good inclination as far as consumer spending. Are they out buying new cars or not? Obviously, inventory is low there because chips, demand for chips is still high and the supply is low, apparently. Some inventory numbers of some of the bigger earnings from the last quarter make me believe otherwise, right? But so we'll just have to see what that number comes out at. Then we got the ADP on employment, right? FMOC announcement, and our boy, Mr. Federal Chair Jerome Powell, aka Mr. Fuck Your Puts, who might be Mr. Fuck Your Calls now, with his new hawkish stance. So look, if we know we got huge FMOC on Wednesday, okay, what likely happens? The market trends and the market blanks. Okay, we'll revisit that. Okay, Thursday, initial jobless claims. And then we have Friday non-farm payroll. So two huge things I'll be looking for this week, right here, FMOC. Okay, and then right here, you look at the non-farm payrolls, two huge economic data events. Okay, and I'll get into what I think is going to happen on the charts here in a second. So I want to be paying attention to all those. They all pretty much come out early in the pre-market, except Tuesday's data comes after market open. Okay, now we got earnings whisper. We have AMD. It'll be interesting AMD to see how the chips are doing. Obviously, chips are the blood life of basically our entire world. Now everything runs on a chip. SoFi, Uber will be interesting. Let's see, are people still using Uber to get around, to travel, etc. Want to see is, if people are traveling, airlines posted good good travel or good numbers, which is all travel, right? People travel and they have extra expendable income. That's the first thing they usually cut: hospitality and travel, when money gets tight. So the airlines did fairly decent. So let's see how Uber does. Roku will be interesting. It's been taken out behind the woodshed ever since COVID at the top there, and then PayPal pretty much floating after it got annihilated after earnings, few earnings ago. So we'll see. Same thing with Airbnb, guys. Airbnb, just like that hospitality travel type, usually only get an Airbnb when you're going out to travel somewhere, okay, or have extra disposable income. So something to just take part in, give you a little bit of a synopsis into the health of the economy. Remember, these are all last quarter's numbers, okay? But as far as what's going to move the market, I don't think any of these earnings would completely gap up or gap us down overnight or anything like that, or after hours of huge moves, solely because all of the major blue chip tech stocks and all of the major banks already reported. Those are the two main weighted factors on the SP 500, and obviously tech is the main weighted on QQQ, right? So let's see what happens this week. I think it'll be all about the FMOC. As far as Fed, is Jerome going to raise it a point, 0.75, 0.5? I don't know. Who knows? And it doesn't matter what he raises it, guys, right? Doesn't matter. All it matters is what are the charts telling us? What are the levels telling us? Okay. And what is our game plan at each one of those levels? Guys, we're traders. We are reactors, not predictors. Okay. Remember that. Now onto the charts here. Like I said, I'm gonna fly by this, guys, because I am traveling today. I do have to get on the road here in a bit, but I'll make sure I get this out to y'all. So look, what happened last week? We kept saying what? We said 390 was the goal. And we also said this, if you go back and watch sermon, we said, look what we have here potentially, right? We had this left shoulder, the head, and we had this right shoulder happen, okay? But the one thing we said was important, just from a technical analysis standpoint, was we finally got back above the 20 MA, right? We could not get back to that 20 MA for the life of us. That is the green dotted line you see, right? Excuse me, I don't want that in there. Oop. Okay, that's not what okay, what is happening? Okie dokie. Nope, that's not what I want. Why is this doing this? Okay. What in the heck is happening? I don't want that one, and I definitely do not want that one. Okay. Sorry about that, guys. Here we go. So look, we said, right, we finally got back above the 20 MA. Okay, we saw the market did not want to go through 357, just did not want to go through it. Anytime it got down there, bounced up pretty decently huge. Okay, so we finally had that candle up above the 20 MA. Then we said what? Wouldn't be surprised with a what? Back test. And that's what we got. The 20 MA had come down here about 366, had that candle down, which was looked more of a bull flag there. Then we went Ripper Magoo up, right? Then we kind of flagged again. We also noticed what the 5 blue dotted crossed the 20. That's a bullish cross. Okay. And we also had the 8 EMA yellow solid cross the 21 EMA red solid, right? So we have a lot of MAs crossing over, right? We had the super trend flip buy, and then we also have this TTM squeeze here, right? I'm just showing you guys a lot of bullish indicators where I think this bear market rally could be strong, as long as, right, as long as we don't get any huge news catalyst like a FMOC or something like that, that could take us right back down. Okay. So last time we were in a squeeze on the daily, guys, the TTM squeeze is it's a measurement of area consolidation between the Bollinger Bands and the Keltner channels. Okay. It's a mathematical equation. It just shows how tight something is, how consolidated. So any dot that is black or red shows major consolidation, red more. So the longer or the more red dots that you have on a time frame, a larger time frame, typically shows the strength of the move that can come out of it. Okay, last bear market rally we had, like we bottomed 362, right? June lows. Then we bounced between 370 and 390, right? What do we have here similar? We had that 8 cross or the 5 crossover the 20. Okay, we finally got through the 20, got through the 5, got through the 50. And then when we got through the 50, okay, you see this TTM down here. I've been consolidating, right, for this whole area in here, consolidating. So when it flipped green, finally, the rally was on and in full force from there. I mean, look where we ran, 390 to 430, ran 40 points, okay, ran right to where? The 200 MA, which is also the down trend line from the recent all-time highs, okay? So if we know we ran after we got through the 50, back test the 50, got through the 100, we went to where? Right, we went to where? The 200 MA. So what could happen for this leg of the squeeze? Well, it's setting up pretty similarly. Jesus. We've got our crossover. We've gotten through the 50 MA now, right? So we have the 5 MAs up here at 392. 50 MA is also at 383.36. Call them both 383. They look like they want to cross. They're probably going to cross. Imagine the 5 MA opens up a tad bit higher. Okay. And then all these other MAs down here start creeping up with it. Okay. So if that's the case for this week, what do I think could happen? Now, look, we have this major gap that everybody's been talking about right here. Okay. Let's just zoom it out, right? Major gap right here. Starts at 403, goes all the way up here to 408. So what I'm saying is this, if we could get through this 100-day moving average again, right, which tells us that we held all of the moving averages underneath. Okay, the next level you'd want to get to, which is lining up almost perfectly to where the gap fill is 408, 410. The 200 moving average is blue, green, cyan, whatever color you want to call it, dotted line is at 410 right now, right? So what do I expect for tomorrow? Well, I could tell you this. We trended very well. Okay, then we consolidated, and now we have a possible trend day. Do we get a day 2? A day 2 would mean a continuation day, another day of buyers. If that's the case, okay, and we take out the 100-day moving average and we take out 390, right? It was our price target last week. You've got 392 and then 396 above 400, a psychological level. And then 403 is the beginning of that gap fill. Guys, for me, 2 short opportunities on the first touches. Okay. 396, definitely a short opportunity. 400, not, I don't love it as much. I do love over 400 to 403 a little bit more for a possible short opportunity. Okay. And I don't think we get through on the first tap into the gap. Market maker likely brings us up a tad and then drops us down, gets everybody caught off sides up there, creates liquidity, drops it down, hits some huge major supports, gets them caught off sides there, and then rips it up, gets through on probably the second or third attempt. Okay. I'm not a fortune teller, but I've just seen that pattern has played out rather a lot. So what do we expect for tomorrow? Do we get a day 2 gap up on the futures? Do we open up higher? Do we just go rip 392 and then maybe the 396 tomorrow, have a huge continuation day up? Then to what? We said the market trends in the market. I said blank, it consolidates. Okay. If it consolidates, it typically consolidates when it's waiting on a huge catalyst. What's the huge catalyst? Well, the FMOC is a pretty fucking good one. We've also got the non-farm payroll jobs on Friday as well. Okay. So this will be my plan for tomorrow. Okay. Every time, look, we broke over the 20-day down here, came back, tested it. Okay. And now we broke through the 50-day. Okay. So it's all about where we open. I have no idea where we're going to open. Okay. But if we head up higher, okay, we're setting us up for a short opportunity for us to have a pullback at some point to actually test either the 50-day, wherever that opens up, or the 5-day moving averages. Okay. They'll likely cross. Okay. So the first, let's say tomorrow we open lower and we start going down in the morning, and we're going to look to find a support. Well, this 385 level was definitely a huge level. And that to me looks like that's where the 5MA could open up with the 50 right below it. Okay. So I would look at that opportunity, see the price action there, see, hey, is this going to hold? Is this level going to hold? Okay. Because we could even get a tad wick down, then maybe a huge continuation day up to go break that 390. It's possible. Okay. Under these levels now, okay, under 380 is a warning shot for bulls. Okay. Because under 380 puts us right back in this huge consolidation range we were in. Okay. And then if they lose 374, it's going to go 370, and that's going to be the 20 MA. Okay. If that is lost, goodbye, say goodnight. Okay. Bulls are done, bears back in control, and likely new lows are coming at some point. Okay. Relatively soon after that. Okay. You can watch the 8 EMA and the 20 ON EMA, wherever those are at on the daily, for possible areas to bounce as well. But I like using the simple moving averages. Is you think about them like they're like magnets, right? They're where you can go once price breaks through that level. Okay, so that's why I'm talking about the 200-day mag and above, and I'm talking about the 20-day below. Okay, under the 20-day here, 370, 376. You can, I would just say under 376 is probably 362, then 360. Psychological level, then 357 underneath. Remember, we have the super trend buy here on the daily. Okay, is at 364, probably opens up, gets up to about 366 or 370 tomorrow. So we'll see where that opens. Okay, so look, I'll just say it for you guys. It's all about where we open tomorrow. Okay, it's all about where we open. We either have a continuation day, or the market's going to want to cool off and go find a support to start building the base for a possible next leg move on the 2 huge catalyst events that we have coming up this week. So guys, levels to the upside. I'll end it right here. Above 380, we see 392, 396, 400, 403, 4808. Okay. And then downside, above 410, we rally pretty good to 416. That happens to be where this downtrend line from the highs is as well. Okay, underneath for 380 is going to be 374, 370, 366, 362, 370. I'm sorry, 364. My apologies. 360, and then 357. Okay, under 357 is new lows, the 350, 348. All right, guys. So, hey, look, hope you had a good weekend. Okay, take your time to do your homework tonight. Get your levels out. Get your economic calendar out. Write down your rules on a goddamn piece of paper, and don't do anything fucking stupid. I'll see you bright and early. Peace.